Assalamualaikum and a good day to everyone. So today we're going into chapter 1, Introduction to Accounting. So let's begin. Okay, so the objective of this chapter is first, explain the definition of accounting and differentiate between accounting and bookkeeping. Second is explain the function of financial statement. Third is identify different groups of users and explain how they use the financial statement. Last is explain the different types of business entities. Okay, so the content outline for this chapter is as stated in this slide. So we'll go into one by one and hopefully you're able to understand and know all of this. Okay, let's begin. Okay, so before we start, the question, why do we need to have accounting knowledge? So as you can see above are the articles I included for you to understand and imagine if you don't have accounting knowledge. See, the title is Pembantu Akaun Syarikat Tudung Farida di Dakwa Pecah Amanah. So, penolong akaun mengaku tidak bersalah pecah amanah. Pecah amanah bekas kerana akaun mengaku tidak bersalah. So if you don't know any accounting knowledge or if you don't have any accounting knowledge, you'll be easily fooled by accountants because that is their specialties, and you'll be blindly trusting them. So having basic accounting knowledge helps you identify any frauds, any errors that happens when you run a business. Okay? So what is accounting? So the simplest definition of accounting is the language of business, a system to measure business activities or economical performance, process the transaction into financial reports and make it available for users' purpose of decision making. So it's called the language of business is because it took all the transaction that happens in a business and put them into numbers and interpret them with detailed and structured result, which you can use to make decision for improvement of your company. Okay, so let's go to the next slide. So in this slide, you can see the definition for both accounting and bookkeeping. So accounting can be defined as the art of classifying, recording and summarizing transaction and business event in monetary terms, which is in your money term, for Malaysia would be RM, and interpret the result to interested parties, users, to enable them to make decision. So the definition is by Abdul Ma'ruf and etc. While bookkeeping is records all the day-to-day transaction of a business and ensure the recorded transaction are correct and up-to-date and comprehensive. So even with the general look of this definition, you can see the difference. Bookkeeping is the process of recording the transaction of a business. While for accounting, you classify, you record, summarize, and you interpret the result for the users so that they can make decision making. Okay, so this is a bit more of a simplified version of the definition. You can see it. In accounting, you will have interpreting, while bookkeeping is only classifying, record, and summarize. Bookkeeping would be the first step, and the second would be accounting, interpreting those recorded results. Okay, so next slide. Okay, so financial statement. So you've heard financial statement, but you don't know what is it. So it is a statement that accountants make that records all the transaction happens in a company's yearly business or quarterly business. So the objective of those reports are to provide financial information about an organization that is useful to various users in decision making, to help users assess the future prospect of a business organization. So the reports have detailed information for users to use to predict and understand events, transaction that happens in a business. So there are four main financial statements. A bit of an intro to the reports. First is statement of financial position. Second is the statement of profit or loss. Third is statement of cash flow. Lastly, statement of changes in equity. So for your course, you will only learn number 1 and 2 only. Okay, but you can read in details regarding all four main financial statement in your book. Okay, next slide. So the purpose of accounting information, it is to know the financial status of the organization, whether the year, for example, in 2020, the company makes a profit, or for that year, they have a loss. So with a detailed report, you can know the financial status of the organization. Next is for easier reference, as humans have limitation in memorizing large information. So the financial reports, the report itself have very detailed information. So those detailed information is sometimes too much for the human brain to process. So we make those reports so that people can see and don't have to memorize the detailed information. Lastly, to avoid misleading financial statement if there are no proper records. So with the reports making process, you will able to see whether each transaction is valid or invalid, and whether there are fraud or errors or any mischief during the transaction that happens in a business yearly performance. You will able to detect any wrongdoings. So that's why we will able to avoid misleading financial statement if there are no proper records, because everything in accounting needs records. Everything that is reported in the financial statement have proper documents. Okay, let's move on to the next slide. Okay, so for this slide is uses of financial statement. So even in the definition, they've used the terms uses. Even throughout my explanation, I also have stated uses. So what are uses? So users are the people that use the financial statement information to make decision. So it is divided into two groups of users. First one that is internal, second is external. There are two groups of users. So when you said internal, there are people within a business organization who use financial information, meaning the people that works in the business within. For the second one is external users, which is people outside of the business entities or organization who use accounting information. So this one is people that don't work in the business, outside of the organization boundaries. Okay? Okay, so in this next slide, you can see a bit of a detail and also a few examples. So internal users, for example, is owners interested in the profit earned from their investment and the financial stability and growth of their business. So owners are shareholders. Shareholders that invest their money into the business. So they are interested in the financial statement to know whether or not the company gained profit for the year. So if the company gained profit, of course they will get dividend. So that's why they use the financial statement. They need to know whether or not they will receive dividend for this year. So the next one is manager need information as guidance in planning, organizing and controlling the organization and analyze the operation of the business. So the managers use the information to strategize business future plans for the business improvement. Lastly is employees interested in the business ability to progress and expand. They look for a steady employment, earning capacity, and other monetary benefits. So when you start working at a business, of course you want the company to be stable. And you also want to know, as an employee, what other benefit than just salary that you would gain. So through the financial statement, you will have that information to know whether or not you will gain a benefit for the year, so or any other monetary benefit if the company's performance is good for that year. Understand? So these are the few examples for internal users. Next we'll go into external users. So first is creditors or bankers, interested to know the ability of the business in repaying the amount owing to them. So external users is outside people, outsider. Okay, out. So they are interested to know your ability to pay their debt. So that's why they use the financial statement. When they see the financial statement, they are confident they'll be able to give money to you because you are able to pay the debt in the future. So the next is current and potential investor. Require information regarding the solvency and financial strength of the business, its present and future earning capacity and the ability of the management. So investors, they need the the accounting information to make decision whether or not to invest in your company or not. So those detailed reports are important because they can compare between company A, company B, which company is more profitable for them to invest. The third is government, interested in the financial statement and reports of a business for tax purpose. So the government are interested in the financial report because they require the tax information. So they need to know the tax you pay, the tax you are supposed to pay. Okay. Lastly is consumers, interested in the establishment of good accounting control as a means of reduction of price of the goods. So consumers are only interested in the reports so that the price of the product that you produce will be lower, or the company image of the product is better. So for example, if you see Nestle, if you see the financial statement of Nestle, you can see that it has stable profit throughout the year and it has good image. So as a consumer, you are confident in buying their products. Okay. Okay. So if you have any question, you can ask me in the class. So let's move on to the next slide. Okay, so in this slide, we focus on the accounting cycle. Start with the source document. For a simple example would be receipt as a proof that the transaction exists. Second, you will post the transaction into a journal. You do a debit and a credit. Third, and post it into a ledger. Fourth, you post the ledger into a trial balance. The fifth would be whether or not those account in the trial balance needs any adjustment, and if an adjustment is needed, adjustment needs to be done. After the adjustment is complete, you will put in a closing entries and report it into a financial statement, which is the four report that I have introduced for you in the earlier slide. Lastly, after making the report, you reverse back those account for a new year. Okay, so this accounting cycle is not fixed. Every book might have their own version, but the main component is there. Okay, so moving on from the previous slide, which focused on accounting cycle, in this slide we'll be learning about the form of business organization. So there are three basic forms of an organization. First is sole proprietorship, second is partnership, third is a company. So first one is sole proprietorships. Pemilikan tunggal in BM, which is a single owned business. There are only one owner to that business. Usually the small shops like runcit are sole proprietorship. They are family owned, one owner head. Okay, they are a simple company, a simple business. So the second is partnership, which are a business that is formed due to two or more partners operating as the head of the business. Okay, so the partnership is divided into two types: conventional, the traditional partnership. Second is limited liability partnership. Okay, the third one is company. So the business form for the last one is company, which are divided into private and public. So most people would know business form in this form lah, in business form, in company form. Private company would be the Sendian Berhad, while for the public would be Berhad. Okay, so these are the general and basic explanation of a company. So in the next slide, we'll go into detail. First one is sole proprietorship. They are registered with the business registrar under Business Registration Act 1957. The capital is contributed by the owner. Only the ownership is owned by one person, and that person is the one that contribute the capital. Fourth is management and control. Managed and controlled by the owner, which is that single person. Liability is unlimited liability, meaning that in the case that the owner of the business is unable to pay their creditor, the creditor can go after the personal asset of the owner to recover the amount of debts. The amount of debts. Okay, so unlimited liability ni bila owner tak mampu nak bayar hutang dia, creditor akan ambil aset dia yang sedia ada untuk bayar hutang. Contoh, dia dah tak ada duit nak bayar. Bila owner tak ada duit nak bayar, dia boleh creditor boleh ambil kereta owner itu as a settlement for that hutang. Okay, dia boleh ambil asset owner untuk settle the debt. It means unlimited. Okay. Next is profit or loss. Profit belongs to the owner, and any loss incurred will be borne by the owner. Okay, so when you're in this type of a business, when you have profit, the owner will have it all. But when you have loss, the owner takes all the loss as well. So books and account, no legal obligation. So because this is an one person owned, it's your personal business. The government has put no legal obligation for you to make a financial report. So you can have all the financial report for your own use without any outsider looking at it because it's your own business. Okay. So next we'll go into partnership. So for partnership, registration is with CCM under the Business Registration Act 1956 and 1957. The capital is contributed by partners according to agreement. So the capital will contribute by partners as agreed. Ownership must be 2 until max number is 20 partners, while for professional partnership would be 2 until 50. So this is a partnership. You have to have at least 2 partners because this is not a sole proprietorship. Sole is start with one and with one, while partnership you start with at least 2, max number would be 20, or professional would be 50. Control and management, managed and controlled by partners or by a board consists of partners. The partners control the business operation. Liability will be limited liability and unlimited. So unlimited is, as I explained before, if there are debt, the creditor can take your assets, your car, any buildings to pay for that debt. While for limited liability, it's restrained only to the business asset or business money. Okay, limited only regarding to business, while unlimited is including your private own. Okay. For profit or loss shared by partners according to Partnership Agreement or Partnership Act 1961. So the profit or loss is shared according as you agreed before the business are made. Lastly, its book and account has no legal obligation because it's still your personal business. Outsider does not need to know what happens in those business. Lastly is a company registered with the Company Commission of Malaysia CCM under Companies Act 2016. If you use an old book, please check this one. We have a new Company Act. Capital contributed by shareholders through purchase of shares. The ownership for private companies Sdn Berhad will be 1 until 50 shareholders, while for public company Berhad, minimum 1 shareholder, maximum depending on the amount of authorized capital. So for management and control, managed and controlled by the board of directors appointed by the shareholders to manage the business. The liability is limited liability, which is limited only to the business assets for any creditor to collect their debt. Profit or loss paid to the shareholders in the form of dividend. So shareholders are the owners. So they will get the dividend by the profit. If there is any profit. If there is a loss, of course there will be no dividend. Lastly, book and account must be kept and sent to the CCM. So, for company only, the Malaysian government obligate them to make a financial report so that the users can see their performance, whether or not they are stable enough to operate for more investment, for any tax involvement, anything that requires the financial information. So for company only, they are obligated to make the financial statement. So that is all from me. Thank you. If you have any question, you can ask. The end.